All right. If you've ever wanted to know exactly what is the Federal Reserve and when they decrease rates, who's actually making that decision? You're on the right episode. So, and we're not going to be talking about the individual as of this recording, Jerome Powell. So we're not going to be talking about the individual because this is not a political podcast. But and I'm speaking with Owen Lee here. So Owen,
Hmm.
this comes up a lot, and I'm gonna risk showing my ignorance on this topic because I'm a marketing guy, right? So I've always been
Yeah.
a marketing guy, and that's where I always did my focus. And the actual, graphs and bars and how do we get to this rate? Well, that's you're the expert. That's why we get one of the reasons why we get along so well is I tend to have a knack at
Thank
marketing,
you.
and you have that knack of marketing also. But in addition to that,
Hmm.
you have a large knowledge base in everything rates kind of thing. So so as we're doing this recording, and I almost never do this, but I'm gonna timestamp this one. So as we're doing the
Hmm.
recording, it's July 24th of 2025. So July 24th of 2025. And actually it's 9:30 in the morning. I better timestamp it to this because something may happen and something may not. But so right now, on the political sphere, the Federal Reserve Chairman is a little bit of a hot seat, or maybe getting picked on, depending upon how you want to view it,
Yep.
right?
He's in the frying pan, that's for sure.
Yeah. So I don't want to talk about that, but I want to talk about the position.
Hmm.
So,
Hmm.
what authority, whoever the Fed chair is, whoever he or she is, what
Hmm.
like what power do they actually have, and is what rates are doing in America, which is incredibly powerful position, frankly, it's probably the I would think one of the leading indicators of the economy as a whole.
Hmm.
Surely this one person doesn't have all the power to dictate our economy. How does all that work?
Correct. So think of it this way, and I think you have some really good points in there. First of all, this is the United States of America, right? So we don't have kings, we don't have queens, we don't have czars. So there's not one specific person that has all the power to raise or lower interest rates. It's not one person. It's made up of this thing called the Fed Open Market Committee. But before we get into that, let's just get into some basics. So think of the Federal Reserve as like a car mechanic.
Okay.
Okay. They have what's called a dual mandate. If you watch Bloomberg or CNBC or whatever the highfalutin economists get on there and they talk about the Fed's dual mandate, they have two things they're supposed to do. Number one, full employment. They're supposed to track the unemployment market and make monetary decisions to try and maintain full employment.
Okay.
Most economists think that full employment is actually about 3 to 4% unemployment rate because you have a certain amount of people that are just in a life transition. Maybe they had a baby, maybe they had a parent die, maybe they just moved, maybe that they're not yet ready to work. So
Okay.
full employment is considered somewhere between 3 and 4% unemployment rate.
Okay.
And then the other part of the mandate is to keep inflation low, right? So inflation, when it gets high, is very restrictive of the economy. It acts like almost like a vice grip, constricting the growth. And ironically, you don't want deflation either, or falling prices can actually be more dangerous than inflation. If you really did the math, we don't have time to go into that on this podcast. But so it's full employment and low inflation.
Okay.
Federal Reserve picks low inflation to be 2%.
Okay.
How they picked that, to be quite honest, the rectal extraction method.
Okay.
Above zero, a little further away from deflation. but it's not crippling or restrictive in any way. There's a lot of very learned economists that think that 2% is unrealistic. It should be in the low threes. But if you do the exponential math on the difference between 3% inflation and 2% inflation, there actually is a meaningful difference. So that's the dual mandate of the Fed. Now, how they control these things is through interest rates. So you get back to the mechanic example, right? Low rates is putting higher octane fuel into the race car that is the U.S. economy. High interest rates puts lower octane fuel. It's almost like having a governor on the fuel intake of the engine. So they're the ones that decide how much gas, how much octane to put in the engine that is the U.S. economy. And so they decide how fast they want the car to go. They want the car to go fast enough to produce 3% inflation. 3% unemployment and 2% inflation.
And has that been the kind of the numbers for like decades? I mean, is that just what this administration or the
decades.
last, or that's
Yeah.
what it's always been kind of thing?
Yeah. The 2%, the 2% is not codified in law or anything like that. That is very much the recent thinking of the Fed. The last three Fed chairs, Ben Bernanke, Janet Yellen, Jerome Powell. So the Fed chair is we don't have kings, we don't have queens, we don't have czars, but the Fed chair is the most influential member of the Fed. If you were to do an analogy, it might be like the Supreme Court, right? The Chief Justice of the Supreme Court is the most important member of the Supreme Court and can hold a lot of sway over the other justices. Same goes for the Fed chair. Now, keeping away from politics, but if you just think about this for a second, the Fed chair is a 4-year term.
By who?
The president.
Okay, so the president
appoints the Fed chair.
Okay.
The Senate confirms the Fed chair, just like they would a cabinet member or an ambassador or something like that. The Fed chair appointment lasts for 5 years, and that's meant to span more than one president, but it's separate from presidential years. So they're meant to span more than one presidential term.
Okay.
And you can serve 2 terms. So so you're meant to span presidents. It's meant to be an apolitical position, meaning not political. And then they have 12 Federal Reserve banks around the country. Each Federal Reserve bank has a chair, and those chairs rotate. A certain number of them vote for 1 year so you always have the Fed chair gets a vote on interest rates. The chair of the New York Fed always votes, and then the other chairs rotate. So that's how you get a committee of the people that vote on whether interest rates go up and down. And they vote, majority rules. The Fed chair might be outvoted. He might want to keep interest rates the same, and the Fed governors want to raise them or lower them. So it's not a czar-like position, but it holds a ton of sway.
Hey there. Hey, if you're loving the tips so far, be sure to hit that subscribe button right down there and then tap the little bell so that you never miss out on more free, cool tips coming your way. Also, I would love to hear from you. Drop a comment beneath there. Let me know what you think or tell me what you'd like to hear next. All right. So if you have the Fed chair, which as of this timestamp is Mr. Powell, but then you have these other chairs of the federal banks. Well, if they each get one vote, then because just like the chief of the Supreme Court, they only get one vote, right? And so
Correct.
so then Jerome Powell himself or whoever that Fed chair is, they're not the ones that's necessarily deciding what the rates are, that one individual, because like you said, this is not a queen or king or a czar. This person is one vote at the table. And if that's true, then why does the Fed chair get so much heat put on them? if this is the consensus of the board, the Fed chair board, hey, rates are going to go up, rates are going to go down. Why is the one person get so much of a hot seat? Why as we're recording this, why is Jerome Powell in the frying pan, so to speak, and getting a lot of attention? And maybe he likes that attention, maybe he doesn't. Why is that if he's just one
Hmm.
vote of a dozen or so?
So, because he's the most important vote, and because he is the one that's out there the most, so he gives a report on the economy to the House Financial Services Committee, the Senate Banking Committee twice a year. He is the one that does the press conference after the Fed meeting to stand up and explain the Fed's thinking. Currently, I don't think you have to be a genius to figure out that President Trump wants interest rates to be lowered. And again, not being political, just being an observer, Jerome Powell said in congressional testimony that were it not for the uncertainty of tariffs, then the Fed would have been lowering interest rates by now. And so that's a statement of fact, but it's also in Washington, D.C., a political statement.
Yeah.
And because President Trump is the one pushing the tariffs, you can love tariffs or you can hate tariffs, but the tariff conversation, I don't think people understand what a seismic shift that is in the world economy. For literally since the end of the Second World War, the United States has had an open market, letting countries come in and sell their goods to make those economies stronger so they could help defend our allies in a potential war with Russia. Okay? That's how Japan got healthy after World War II. That's how Germany and Europe got up off their back in World War II. And finally, 80 some years later, President Trump said, enough, this isn't the world order anymore. We have to move on from the post-World War II order. Your economies are healthy enough to exist on their own. You can't sell into our economy unless we can sell into yours. That's a seismic shift in the world economy, if you really think about it. So he's trying to do, whether you agree with it or not, he's trying to do something that hasn't been done in 75 to 80 years. And Jerome Powell gets in front of the Congress and says, well, if it wasn't for tariffs, we would be lowering interest rates. There are Powell backers who say, you might not like that statement, but he's right. If a tax, which a tariff is essentially a tax, placed on goods coming to this country, it's impossible to believe that the tariff isn't going to get passed on to the consumer. And so that's, I think, there are other things at play, but I think that's the heart of the disagreement.
All right. So, but let's say Jerome leaves office or leaves that position,
Mm-hmm.
and whether he leaves early or what's the scheduled time,
May of 2026.
all right. So let's say whether it's
So he's
sooner.
only got 10 months left either way.
Yeah. So let's say now or May 20 or May when it happens. And I'm using air quotes here naturally.
Yep.
But even whoever his replacement is, whoever he or she is, the board's still voting, and that doesn't mean a natural, because Jerome himself, the way I'm understanding this, is not the one that says, hey, I don't like tariffs, I don't like Trump, or I don't like Democrats, I don't like Republicans, or whatever his or her stance is. That irregardless of that, if the others think, no, we want rates to go down, they could do exactly opposite of what Jerome wants to do or that position wants to do. And that
Mm-hmm.
even if he or she gives a statement that is seen as political, the others still have to vote for it. And so the way I'm seeing it,
Mm-hmm.
that person doesn't have, while they got the megaphone in front of them, they don't have control of the vote. And they might have influence on the
Mm-hmm.
vote because, the chief, everybody wants to kind of fall in line with the chief. But if the chief is saying, hey, I'm going to go out and kill puppy dogs, I'm I'm not going to go kill puppy dogs, right? That's not who I am.
That's right.
And
Yeah.
so he or she could get up there and say, "Hey, this is what I want to do." By going, not on my watch. We're not doing that. So if ever, so the
Oh,
majority has to,
Carl, why are you bringing logic into Washington
yeah.
D.C.?
I get. So I guess my thing
Right?
is, so while he or she
Uh,
doesn't have extensive voting power, they are the one with the megaphone, and the others,
they have the bully pulpit. That's right. And nothing. And I kind of made a joke there, of course, but nothing unites in Washington D.C. like a common enemy.
mhm,
And so, those who want lower interest rates, their common enemy is currently Jerome Powell.
yeah,
And listen, Jerome Powell is a very smart man, right? He knew, I believe, what he was doing when he said, but for the tariffs, the Fed would probably be lowering interest rates. That's about as strong a political statement as you're ever going to get a Fed chair to make.
yeah.
And because they speak in tongues a little bit, you got to decipher. There's a lot of analysis about the words they choose and the severity of the words they choose, and they're very deliberate with their grammar. And I mean that sincerely, because hundreds of millions, billions of dollars are placed, bets almost
Mhm.
in the stock market on the way the Fed is thinking, and certainly in the bond market, and including the mortgage-backed securities market. And so, heavy is the head that wears the crown, and Jerome Powell's wearing the crown. I think the man is impervious to pressure, and love him or hate him, he's got 10 months left. And whether he gets fired by the president or whether his term naturally expires, his life after Fed chair is not going to change that much. The man is going to publish. The man is going to fly around the world and give speeches for 7 figures every time he steps to the mic. And he's going to live a pretty gosh darn good rest of his life. And so you get paid a lot to be a very expert Fed watcher.
Mm.
And, and so I don't see him at this, maybe if he had 3 years left in his term, he might be a little bit more susceptible to the pressure. Obviously, in the mortgage business, we want lower interest rates, right? That's very helpful. But I don't understand the chess match of trying to put pressure on Jerome Powell unless you're building a case to fire him. If they're really going to fire him, they'll get their new person in sooner, presumably get a rate cut sooner. I don't, some of this, I think, it makes sense, but when you pull the green curtain back and you look at the players, I'm not sure it makes sense. I just, they don't do things in Washington, D.C. by accident, but the immediate path is not 100% clear to me.
Yeah. Very interesting. All right. I think I have a much better
Yes.
picture of this. And I don't know. I just wanted clarity in this. You hear people talking, and I generally stay out of this, because
Right.
I love the way Michael Jordan, very smart man, very, very, very smart man.
Mm-hmm.
I love the way he was asked why he doesn't use his incredible following for more political moves, and he's famous for quoting, "Because Republicans buy tennis shoes too," and
That's right.
very bright, right? Very bright. So
Well, I will just say this. Be careful what you wish for, because my own personal opinion is that home mortgage interest rates in the mortgage-backed securities market does not always move in tandem with the Federal Reserve. And if Jerome Powell is replaced and the perception of the bond market, especially, is that the new person is a lackey for a president who wants interest rates to be drastically lower, the bond market will revolt and interest rates will actually go up, not down. And it's just a hypothesis. I'm not a trained
Okay, no, wait a
economist
second.
or
No, wait a
anything
second.
like that.
No, no, wait a second. Wait a
Yeah.
second. So we're having a birthday party here. We have these pretty balloons, and you're going around with a pen, popping our balloons. So let me have my
I
balloon.
am a harbinger. I am a harbinger of joy. I'm just a bowl of cherries this morning. I don't know
Yeah.
what to say.
Yeah, it's a complicated
Uh,
picture. Which which kind of goes a little bit into why I've never put a tremendous amount of energy in this. I think we ought to be informed, right? And I'm not saying we're
yeah.
not,
Right.
but I've never put a tremendous amount of energy in this because I've always thought rates are up or down. I'm gonna help as many families,
You
and I know you're
gotta.
the same
Yeah.
way. We're gonna help as many families as we can.
100%.
Yeah,
People, certain number of millions of people are going to buy a home this year, whether the interest rate's 5% or 7%. Of course, more people will buy at 5%, but we all have to run our businesses, right? Why on earth would you accept success or failure, better or worse, in your business based on a metric over which you have absolutely no control?
couldn't agree
Doesn't
with you
make any
more.
sense, right? But I will say this just about my previous comment earlier. Markets no longer trade on fundamentals.
Mm,
We are in a business news cycle that's no different than the regular news cycle. Markets don't trade on fundamentals. Markets trade on what the so-called experts think the fundamentals might be in 6 to 9 months.
mhm.
So
Yeah,
because it's a race to get there first. So if everybody thinks that interest rates are being lowered by the Federal Reserve and it's not a good time to lower interest rates and it's going to stoke inflation, the inflation trade will begin 6 to 12 months before the actual inflation arrives. So be careful what you wish for. That's why I'm very hesitant about this whole, fire Jerome Powell, get somebody in there that'll lower interest rates. Of course, I want lower interest rates. I'm in the mortgage business, for crying out loud. But I don't necessarily believe that one follows the other anymore. 10,
yeah,
15 years ago, sure, but not today.
yeah. And I've always thought, my the market doesn't dictate my success or lack thereof. My marketing does. My marketing is in
You,
control of
you,
my business. So
you
anyway.
can't pin your optimism or pessimism about your job on a metric over which you have no control.
Yeah.
That's insanity.
Yeah. Now it's nice having both, but one's not going to dictate
It is.
not going to dictate ours.
It
I
is.
know that.
Don't. Hey, I'd much rather jog a marathon with a 20-mile-an-hour wind at my back instead of my face. Although Carl, I could never run a marathon regardless
Yeah, I was
of
going to
the
say
wind.
you'll have to I'll have to read that book. So you have to let me know how that works out. So all right, man. Well, I think we kind of
Yeah.
covered this. So hey,
Yep.
thanks for everything you do for our industry. You're just an awesome guy, and I really appreciate you, my friend.
You're very kind. Thank you.
All right, real good. So that was Owen Lee of Success Mortgage Partners, and so be sure to reach out to him. By the way, Owen does a lot of articles and a lot of short pieces of information about topics just like this on LinkedIn. So be sure to look him up on LinkedIn. We'll put a link on the show in the show notes here. It's Owen Owen, and then last name Lee Lee. And go check him out on LinkedIn. A lot of good stuff you do there. So, all right. Hey, thanks a lot for
Thank you.
spending your time with us here on the podcast. I appreciate you. And we always appreciate those reviews. That's what helps get the word out to even more people. And so, anytime you can share this with your friends, we really appreciate it. So, that's it. And we'll see you on the next episode of Loan Officer Freedom. Thanks again, everybody. Bye bye.
Thank you. All right. Bye bye.